Here's an ETF investing tip. Always check the top 10 holdings. The most frustrating thing when investing in ETFs is identifying the right sector or theme and then using the wrong ETF to play that idea. ETFs that appear to cover the same areas, sectors or themes can often have quite different underlying holdings. One thing you should always check is the top 10 holdings, which are clearly listed on the ETF provider's website. Some ETFs may have oversized positions in a few individual stocks, which may or may not be a good thing depending on market conditions. Here are a few examples. QRE and MVR are ETFs that both cover the resources sector in Australia. However, QRE and MVR are actually based on different indexes, hence their holdings are quite different. QRE holds a 36% position in BHP, while MVR only holds a 7% position. In fact, QRE is 44.5% BHP and Rio, whereas MVR is 12.8%. Most of the time, this wouldn't be an issue because most sectors or themes tend to move together, except that BHP and Rio are seriously underperforming at the moment. Another example is Asia exposure and the ETFs IAA and Asia. IAA has a 24.64% exposure to Taiwan Semiconductor, while Asia has a 10.7% exposure. When choosing between these two ETFs, you want to consider whether you want such an oversized position to one holding. The simplest thing you can do when researching an ETF is pull up the charts of the top 10 holdings and see if they are in an uptrend, a base, or a downtrend. The more of the holdings in a base or uptrend, the better. And most importantly, don't let your investment thesis be dragged down by large holdings that are underperforming.